Hey guys, welcome to my channel. Today I'm going to do a bit of a casual talk about what is a guarantor loan. So basically, if you haven't hit the subscribe button, the bell notification button, you know what to do. This channel is around a very dismal channel, you know, bloody under 500 followers. Hit it up, guys. What is wrong with you?
What is wrong with you people?
Anyway, let's go to the drawing board where we talk about what is a guarantor loan. So at the moment, what is my definition? A guarantor loan is a guarantor, well, it's a loan, right? It's a loan. Catch you next time. But, you know, you have your parents, let's call them, you know, the third party, where they give you a portion of their property. So what happens is, you know, this is you over here, and then, you know, you want to buy a house in Sydney, for example, for $1 million. Good luck for that price. But hypothetically, let's say you want to get a place for $1 million. Let's just say you could service, you and your chick girlfriend or your spouse, fiance, whatever it is, you guys can service $800K, okay? Which probably technically means you're on like $150,000, okay? And you paid off your HECS because your parents paid it off for you. Bloody spoiled brats.
You ungrateful little brat!
Anyway, you can service $800K, but then, you know, you guys have been spending it big, you know, buying Uber Eats, going on Kentucky tours to Europe, got no money, got jack all, you know? But that's all right. You got parents that have, like, for example, they live in the bloody North Shore and they have a $3 million property. No loan, obviously, because their parents probably gave them the property. Jokes. There's no money on this property, okay? What happens is, you need to buy the $1 million property, right? You only got lending for $800K, right? You got lending for $800K. So what do? Let's put some sparkles over here. Well, you need $200K, right? You need $200K over here to complete this purchase. Now, this is like entirely assuming you, in New South Wales, you're opting for our annual land tax, which means you don't pay the bloody stamp duty up front, which could be about 4%. Okay, so you're opting to pay maybe like $2K a year, which, by the way, if you're gonna purchase a property after the 30th of June, when Labor comes into power, they're gonna scrap the Liberal, you know, stamp duty, annual land tax thing. So anything under $850, no stamp duty, but over $850, you gotta pay for stamp duty. So for this case, if you're buying this after the 30th of June, well, sucked in, you gotta pay some stamp duty. So you gotta be quick, guys. Gotta be quick.
Rule number one, you gotta be quick.
Okay, so what happens is, let's go back to the difference, which is 1 mil minus 800 is 200K. Well, where do you get this from? Well, insert the guarantor loan over here, okay? So it says it here. It says that it helps younger people like yourself, or maybe might not be young, I don't know, but your first home buyers, okay? So it helps you to secure this loan against your folks' $3 million property, or hypothetically, to bridge the finance for this $1 million property so you can buy the house and obviously live in it. I want to give some examples of 3 banks to give you different variations of different guarantor loans. So at the moment, there are a few banks that are doing it at the moment. So one of them is Commonwealth Bank. Well, there's a lot of banks that are doing it, but I'll just give you an example. There's Westpac, okay? And there's also ING, okay? So here's my notes. So I said here, Commonwealth Bank at the moment, what they're doing is they have a thing called Family Guarantee Home Loan, okay? Same thing like I just described. The parents act as a guarantor, okay? So the parents guarantor a portion of the loan, which is basically the $200K if you're buying $1 million property. However, if the borrower's default, right, which means you guys ran out of money because you probably spent too much money going on more overseas trips than you should do.
Okay. Look,
Then, you know, they're going to go after your parents' $200K against their property. which is a very, very bad son. Very, very bad son. Don't do that, okay?
I am not a bad son.
Now, Westpac has a thing called family security guarantee. The difference with CBA and Westpac actually allows a family member to act as a guarantor, but then they can actually use their equity. They can actually use their equity, a term deposit, so in the form of term deposit, to do the guarantor. So they don't necessarily need to give their property as a second mortgage, right? And I'll explain more about what is a first mortgage, second mortgage, right? Or they can do what CBA is doing, which is equity from their home as a security. ING also does it too. It's called Mortgage Simplifier Home Loan. And they do the same yada yada thing, right? But the only thing I want you guys to pay attention to is that some lenders, for example, this home, it doesn't have any home loan for this scenario. It's called unencumbered. So some lenders would only like these type of properties. And then what happens, it's called first mortgage. First mortgage, right? So what happens is there's no loan, and then they'll take first mortgage against the security to provide the 200K. But what happens is, what if your parents still have like, I don't know, 500K sitting against this property? Well, you can't do first mortgage. Well, what happens is there are some lenders, they'll do second mortgage, okay? But the thing is, some banks, for example, I know ING at the moment, let's zoom back to ING, they will not do second mortgage. So what they'll suggest you to do is they'll say, hey, old folks who has a mortgage, for example, the old folks have a mortgage with ANZ, you know, your folks have a mortgage with ANZ, 500K. They're like, well, you got to refinance that to ING, or we can't do that. We can't do the guarantor. Now your folks will be like,
Oh, that's we love ANZ because we've been with them for yonks and we don't like ING, the bloody orange lion.
so then you're stuck. So which means you got to only find a lender that does second mortgage, which sit at the back of the bank. So basically, how that looks like is it's like you know, your house, the house is here, and then first mortgage means, for example, ANZ, and then they took, say for example, there's a parking lot. So they took the main parking lot in front of the driveway, the main house, but then, for example, Westpac is happy to sit here as a second mortgage to provide this 200K guarantor. Now, ING won't do that. ING's like, nah, we want top spot, right? We want to park at the freaking front of the house, which then you'd be like, F you, well, we don't use you. But then, you know, some of you guys might go, oh, but then ING has a good rate, yada, 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 not stuff. So you got to make a difference to ask your mortgage broker or lender when you're doing family guarantor, you know, whether they take first mortgage or they have to take second mortgage. Now, if your property is unencumbered, which is, for example, in this scenario, this is $3 million, there's no loan on it, doesn't really matter. But if your, you know, if your parents have a property which has a loan on it, then you got to only consider lenders that would only do second mortgage. So then that, you know, out of the bloody 10, 15 lenders out there, it filters down to 1 or 2, okay? So, for example, I put an example here of what that looks like in terms of loan repayment. So based on $1 million loan of 30 years, the breakdown of the repayments, okay? So the borrower would be responsible for repaying the principal interest on the main amount of the loan, $800,000. So using 5.5% interest rate, the repayments will be $4,542 a month, okay? That's based on P&I variable rates. Okay. Now the parents will be providing additional security for the, you know, the 200K that we described here, right? Because, you know, 800 minus 1 mil, 200 difference. So that works out to be at 5.5, extra $1,135. You gotta understand, guys, just because your parents are gonna guarantor on the 200K doesn't mean they're making the repayments. You have to. You gotta make the bloody repayments. So that ends up to be a total of $5,677 per month out of your loan repayments. So every month you're gonna make that repayments. If you don't, they'll go after your parents' property and then after your property. So make sure that you serve this. Now, obviously, when you apply for a pre-approval of a guarantor loan, the broker, the lender, make sure you can service that type of loan. But then, with the interest rates constantly going up, there was a pause this month in April. But look, there's no guarantees there will be further pauses. So, and rates can go up to 6 to 6.5. Okay. So there you have it, guys. I mean, what are the 5 reasons why someone might consider getting a guarantor loan? Well, first of all, you don't have significant credit history. Okay. So, you got to make what you do. So say your parents are like, we want you to move out of our house. So seriously, just get out of the basement. We want to have our alone time.
Get out of this house.
So, you can use some of their equity to get into the property market. Number 2 is you want to avoid paying mortgage insurance. For example, if you don't have a 20% deposit, which means you're blending at 80%, you likely would be borrowing at 90 to 95%, which involves a mortgage insurance about 2 to 3%. And if you watch my previous video about mortgage insurance, then you'll know that mortgage insurance is a lesser of 2 evils. It's still bad, but it helps you get a foothold in the market. But if you've got guarantor loans, why not use it, right? And also, you want to get into the property market faster, and most likely you guys don't want to live in a shoebox around 650k for Western Sydney if you're in New South Wales. You want to purchase property that's outside your budget. You want to live in that house right now rather than waiting. You can use some of your parents' equity. So guys, there you have it for guarantor loans. I hope you like this format. Hit the put some comments, trigger the YouTube algorithm. Please give my dismal channel on YouTube some love.
Give me some love.
As you do know, I do have 43,000 followers in TikTok. I do like to see the same following on my YouTube channel. You know what I'm talking about?
You know what I mean.
Yeah. Anyway, if you guys want to see any more different videos, I think I'm going to keep to this format. I guess it's just easier. As you can see from my previous format, it's a bit formal. This is a bit more candid, a bit more relaxed. Anyway, catch you next time.